Welcome to Adding Dollars. In this video, I'll be going over how much you could have made if you used the wheel strategy on Meta stock. I'll be testing this over a 1-year period and showing you the backtest results. Before I jump into it, if you're new to the wheel strategy or covered calls and cash secured puts, then make sure to pause the video and check out the videos in the description. Let's go ahead and jump into it. I'll quickly start by describing the wheel strategy, and then we can look at the specific wheel strategy that I'll be running in my backtest. So the way the wheel strategy starts is you start by selling a cash secured put, and then if you get assigned on that position, which basically means the stock ends up closing below the strike price of your put at expiration, you end up having to buy 100 shares of the stock for each option contract that you're selling. So in this example, let's pretend we're selling one put option contract. If we got assigned, we would be obligated to buy 100 shares of the stock at the strike price of the put. So if we get assigned, we now own 100 shares of the stock, and then we would start selling covered calls. So we would sell a call option at a price higher than the shares that we own. And what could happen in this scenario is if the stock price ends up closing higher than the call option that we're selling at expiration, then you end up getting assigned and have to sell your 100 shares of the stock. And then as you can see here, the process would just loop back and start over again. The alternative path is when you sell this cash secured put, the stock price might not come down below the strike price of the put option that you're selling, in which case you're not assigned, which means your cash secured put expires. You just get to keep the premium from selling the put option and then repeat the process. Let's say you do that a couple times, you then end up getting assigned because the stock price does come down low enough. You end up buying 100 shares of the stock, and now you can start doing the call portion of it. If you sell a call, but you don't get assigned, which means the stock doesn't end up closing above the call option strike price at expiration, then your call option just expires, you get to keep the premium, and you just repeat selling calls until this other path happens. Eventually, if you do get assigned and have to sell your 100 shares, again, you start the process over again, and that's why they call it the wheel strategy. Now let's go ahead and look at the specific wheel strategy we'll be doing for these backtests. This is exactly the same diagram as the wheel strategy with just a couple more specifics around the strategy. So in this case, we'll be selling a cash secured put that has a delta of less than or equal to 0.2. You can think of delta as the probability that that option ends up in the money. So in this case, we're only going to be selling options that have a less than 20% chance of ending up in the money, or you can think of that as less than a 20% chance of getting assigned. So you may end up just selling put options for a while because there's only a 20% chance you end up getting assigned. And then once we do get assigned, we'll sell calls that have a 20% chance of getting assigned. So again, you may end up just selling calls, collecting premium until eventually the stock does rise and you get assigned, have to sell your shares, and then repeat the process. Additionally, I'll only be selling options with weekly expirations, so expiring the following Friday. And then I'll also be doing these backtests with only one option at a time. I'm not going to be selling multiple options. If you're interested in seeing backtests with different delta values, different expirations, or a different number of contracts, feel free to leave those down in the comments and I can share the results. Now that we know the strategy we're backtesting, here are the results. I've written some code using the Quant Connect platform to backtest the strategy, and this screen shows the results. This is a backtest starting from November 11th, 2022 up to November 11th, 2023. The main numbers to focus on here are the equity, net profit, and return percentage. The equity is how much we would have if we closed out any open positions and the total amount of money that we would have on November 11th, 2023 at the end of the backtest. For this backtest, we started with $35,000 in the account and looks like we're ending with $42,708, which means we have a profit of about $7,708 or a return percentage of 22% in just 1 year using the wheel strategy on Meta stock. The net profit here is just slightly different. That's because this is showing the amount of profit that has been captured, not necessarily closing out any currently open positions. So I'll mainly focus on the equity. Again, we started with $35,000 and we're ending with $42,708, which is a return of 22%. One other interesting thing to call out during this backtest is the max drawdown. So this was the lowest percentage drawdown on the total equity. And here we can see that it had a max drawdown of about 8.45% as its max drawdown. I also like to compare the results of this wheel strategy, which had a 22% return, with the buy and hold strategy. So in this case, if we would have just bought Meta stock around November 11th and then just held it for 1 year, currently we would have had a return of 188%, which is much larger than the 22% we would have had if we did the wheel strategy. Similarly, I like to compare this against the SPY. And in this case, if you would have bought the SPY a year ago around November 11th and just held for 1 year, you would currently be up about 11.41%, which is less than how much you would have if you did the wheel strategy on Meta. Additionally, your max drawdown on the SPY would be about 9.2%, which is greater than the drawdown that we saw for Meta using the wheel strategy. As always, if you enjoyed this video, don't forget to like and subscribe. And if you want to see me do this analysis on any other stock, feel free to comment that down below, and I'll see you all in the next one.